This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris provides independent, unbiased analysis for the organic and non-GMO agricultural sector, and our prices reflect real-world trades. Using only verified contracts, Mercaris aggregates, anonymizes, and reports data directly provided by industry players. Interested in contributing? If you are a first handler, you can report your trades and earn free access to services. To learn more, visit mercaris.com/survey_participants. And thank you to Mercaris.
Hi, this is Ryan Koory, the Director of Economics here at Mercaris, with your monthly outlook update for the U.S. organic commodity market. You know, sitting here at the start of midpoint of February, as we look at the market, there's a few bits of information and market news that have come out over the past few weeks that are pretty interesting. One of them that I think may prove impactful once we start to get into the spring is this bout of cold weather we've gotten over the past several weeks. I can say here where I live in central Missouri, we had at least a week, maybe almost 2 weeks of temperatures well below 20 degrees before we ever had any snow on the ground. And I know that these conditions have kind of expanded all the way down into Texas, and including areas like Oklahoma and Kansas and other chunks of the U.S. Corn Belt, and even extending up into the Northwest. And with weather being this cold for this long, and really with not much snow coverage preceding it, there are some concerns about what the winter kill might look like. Particularly if you think about, what it may mean for cover crops and things like that nature. It's going to be something important for organic farmers, particularly who really rely on winter cover, to be aware of what your emergence looks like once things start to warm up and once things start to move forward here in the next several weeks.
Ryan, are there any market crops that would be impacted by this cold and the potential winter kill that could be coming?
Yeah, the obvious crops, of course, are anything that's winter seeded, right? So your winter rye, your winter wheat, anything like that you may have planned on harvesting this spring. Anywhere that you have some winter kill that's going to produce thinner stands or that's going to cause some loss of acreage, that's something to be concerned about. I think, though, with organic farmers, where it's a little bit different than maybe what a lot of the conventional folks may be considering is what it does to your winter cover that you maybe don't intend to harvest. Things that, like winter rye that you may plan on crimping over to plant soybeans into, or any kind of a winter cover crop that you may plan on using for green till. If those crops don't emerge and perform well, we could see a situation where some organic farmers have fields where they have some issues trying to combat weeds that could be trying to grow in those kind of conditions, or maybe some nutrient deficit due to the fact that they just don't have quite that green till this year that they were maybe planning on. Another interesting piece of news, and we talked about this a little bit last month, was the NLP's announcement about trade with India, essentially announcing that they were ending the agreement that allowed Indian exports to be sent to the United States without certification through the NLP. And since then, we've got a little bit more information around that, and really what it looks like is it's potentially less impactful than it looked at first blush. With with that announcement, really what it comes down to is anyone within India who was exporting to the U.S. under an agreement rather than an actual NOP certification, they essentially have till the middle of July this year to begin their recertification process. And then once that recertification process has begun, they have until middle of July of next year to complete it. And so long as they stay on that path, there's really nothing to disrupt their ability to export to the United States. That's not to say that there's not going to be some certifiers or some operations who don't meet the certification criteria, or they don't try to re-sign up for the certification criteria. But really, whenever we talk about this marketing year, and maybe even this fall, there's really nothing to suggest that announcement is going to significantly impact our ability to source soybeans from India.
So on the surface, it looks like that's a potential positive. Well, I guess it depends what viewpoint you're looking at. That there might not be as big of an impact on Indian imports, but we did talk a little bit last month about the pace of Indian imports, in particular soybeans and soybean meal. And I guess if that pace can now continue without disruption, that could have a major impact. Or do you think some of that might have been just front running, for lack of a better term, with that announcement having been made?
Yeah, no, I mean, that's a really important question. Talking about that number, just how much soybean meal we've imported so far this year. Looking at September through January, essentially you're talking the first 5 months of this marketing year. Overall, U.S. organic soybean meal imports are up pretty much double. We're sitting somewhere close to 200,000 metric tons of imports versus last year we were at about 100,000 metric tons. So yeah, that pace has been phenomenal. With that pace being up so much, it's going to be really interesting to see what imports do over the next several months. And now that this announcement's out there, was this front loading? Was this a lot of U.S. Feed purchasers trying to get in supplies before some kind of announcement was being able to be made that could disrupt their ability to import? Or is this, something else? If we see this kind of pace continue into the summer months of this year, that's a lot of extra soy being brought into the U.S. markets, and that could be pretty impactful for U.S. organic soy prices. I'll be watching this really closely over the next several months to see just how much more soy we can continue to bring in at this rate, just because it has been so striking. And so I guess the third piece of news that's come out over the past couple of weeks was the announcement by Bell & Evans, Cargill, and Rodale, essentially launching an initiative to bring on 50,000 acres of organic corn and soybeans over the next 5 years. And really what this announcement is, it's a step by Bell & Evans, being facilitated by Rodale and Cargill, for them to be able to continue to expand their organic poultry production and source some of those inputs domestically. It's a pretty substantial increase, 50,000 acres, particularly considering the fact that it's for the intent of facilitating production of Bell & Evans chicken, which is largely out of Pennsylvania. So you can imagine a lot of those acres are going to be in that area. And whether those acres come from new operations or expanding current contracts with current operators that they deal with, exactly how they go about and where they add those acres could mean a whole lot of different things for the organic industry. But either way, 5 years is a period to implement this growth, and 50,000 acres, it'll help escalate the rate of growth for organic acres in the United States, but it's not likely to do a whole lot for prices in the near term, particularly considering the pace that they're looking at. Pivoting from that, kind of continuing to think about prices and where they are now, what we saw over the harvest period and really into last summer going into it, where we saw prices weakening, we continue to see them improve. Looking at the 2-week average ending February 6th for U.S. Corn Belt delivered organic feed grade corn, we saw it average about $7.30 that first part of February, which is up about 20 cents per bushel from the start of January. And January was up from December. We continue to see contracts come in well above $7, where prior, back in the third and fourth quarter of last year, we definitely saw them coming in closer to $6. So we continue to see improvement in the feed grade corn market. And with that, as feed grade wheat does, it tends to follow that market. And really what we're starting to see is feed-grade corn come in somewhere, or feed-grade wheat, rather, come in somewhere around $7.30 to $7.50 per bushel delivered. And then turning to soybeans, soybeans continue to kind of sound like a broken record. If we look at where soybean prices are, organic feed-grade soybeans delivered to the U.S. Corn Belt, they're coming in at about $20 per bushel, which again, that's pretty much consistent with what we've seen soybean prices do really over the whole, since the beginning of 2020, or 2020 rather. And this is just, continued stabilization we see in this market, which really isn't that surprising considering the fact that domestic supply just isn't that big of a picture of that price.
In regards to soybeans as well, like you mentioned, we'll be watching closely on the impact of the imports from India and, anywhere else too. But imports play a major factor in that soybean price. But really here domestically, as we've talked over the last couple of months, with that corn price seems to be the one that's being watched pretty closely here lately, with the conventional and non-GMO corn pricing continuing to climb. But now we're seeing, although slowly, we're seeing the organic corn price start to creep up a little bit, which was to be anticipated with conventional and non-GMO. But the question for you, Ryan, would be, is this reaction in the organic corn market, the slow climb back up, it seems to me to be a little bit faster than it maybe was in the past, which may mean a maturing, more liquid market. Is what I'm seeing correct, or what's your interpretation there?
Yeah, if you kind of think about the U.S. organic corn market in terms of really what that supply picture looks like, and the demand side too, the demand side's not super interesting. We continue to see, positive incremental movement there. Things like Bell and Evans continue to add production, and dairy has been pretty slow, but we've seen turkey take off. We just continue to see the demand side grow. But from the supply side, what's really interesting to watch is just how much we've been able to expand U.S. production and acreage over the past 5 years. If we take that longer arc perspective and we look at what U.S. organic corn markets look like, say back in 2015, we imported somewhere a little more than 50% of our organic corn needs. And that number has come down pretty sharply. This past marketing year, that 19-20 marketing year, that shrank to about 23-25%. And then if we look at this year, looking again at that September through January window, we're looking at organic corn imports that are down another 43% year over year. So given its current pace, by the end of this marketing year, we're likely to see import share of U.S. supply fall to somewhere around 10 to 15%. And with that, what that means is the U.S. price is becoming more and more dependent and influenced by what's going on with U.S. production and U.S. demand. And as we continue to see that import number fall, which is positive in a lot of ways because that indicates that, the value of using that organic corn and staying in U.S. markets. You consider the fact that anything that's imported is essentially dollars that don't wind up in organic farmers' pockets here in the United States. Well, it's good to see those in U.S. pockets. But the other thing you have to think about is if you're starting to close an import gap to that extent, and you really are relying on domestic production, eventually production is going to catch up to demand. And then what are you going to do? If you look at that soybean gap, where we're still importing somewhere around 75% of our organic soybeans, and you try to add to that soybean picture to close that, you're going to add U.S. organic corn acres. And it's really not hard to conceive of the situation that within the next 5 years, we may be trying to find export markets for U.S. organic corn. If we do see this import share fall down to about 10% this year, that doesn't leave much left before we actually have enough acres to satisfy what we're using domestically. So, thinking about organic corn prices in the U.S., they're going to become more volatile than they have been in the past, just because we do have a more liquid market now. And they're going to be more dependent on what's going on with U.S. production. And we're starting to approach a position where we have to start thinking creatively, not in the long term, but even in the medium term, about what we're going to do to grow demand and do with U.S. organic corn supplies if we continue to expand and add acres like we are at the moment.
Well, Ryan, this is great information for a farmer or any company that's looking ahead to be expanding their mindset of where this organic market ought to be going. And really appreciate the information and your time today. And we'll be back next month with more and more follow-up. And thanks a lot for listening. Thanks, Ryan.
Thanks, Ryan.